For years, right, the whole story around Tesla has been about its giant pile of cash and its huge profits. But what if I told you that entire narrative is about to get flipped completely on its head? Today, we're diving into why Tesla might be facing a need for money so big it could redefine the entire company.
Okay, so let's just jump right into the big question, the one that kind of challenges everything we thought we knew. Is Tesla actually done raising money? For the longest time, the answer seemed like a definite yes. I mean, the company was an absolute cash-generating machine. But a new reality seems to be setting in, and it's being driven by ambitions that are, well, they're almost unbelievably huge.
It's really like looking at two completely different companies. On the one side, you have the Tesla of the recent past. All the talk was about share buybacks, strong profits, and trying to figure out what to do with all that cash. Then you look at the near future and bam, it's a jaw-dropping need for hundreds of billions, maybe even $1 trillion in new capital. This isn't just a minor tweak, folks. This is a fundamental rewrite of Tesla's whole financial story. And this quote really just nails it. This realization that Tesla is not done raising money is probably one of the single biggest changes in how experts are looking at the company. It seems like the era of Tesla just funding its own growth is winding down, and a whole new era of massive, massive capital raises could be right around the corner. So you're probably asking why? Why the sudden need for so much money? Well, it comes down to a to-do list with a truly staggering price tag. We're talking about ambitions that go way, way beyond just building cars. Come on, let's take a look at the actual numbers. First up, orbital compute. Now just think of this as a giant network of data centers, but floating in space. To build out these 7 gigawatts of computing power that Musk wants up there, the estimated cost is a staggering $700 billion. That one project alone is bigger than the financial resources of most countries, let alone companies.
Okay, next, you need the specialized hardware, right? The brains to power all this AI. Well, building just a single state-of-the-art chip gigafab is not going to be cheap. When you add up the construction and then all the ongoing investment you'll need for new chip designs, you're looking at around another $100 billion. And, of course, there is the robotaxi fleet, the so-called cybercabs. If the long-term vision is a fleet of 20 times million vehicles, well, do the math. Even at $25,000 a pop, that requires an investment of $500 billion. You can see how these numbers just keep getting bigger and bigger. So this slide really puts it all into perspective. When you add everything up, and get this doesn't even count things like the Optimus robot fleet or the costs of training the AI, you easily sail past $1 trillion. Now compare that to Tesla's cash on hand, which is roughly $42 billion. The gap is, well, it's immense. And here's the crucial point. The money they make from day-to-day business just can't bridge that gap. As the source material points out, the total investment they need is in the $1 trillion range. Simply reinvesting profits isn't going to be enough, not even close. Not at the speed Musk is planning to move. They need a whole new financial strategy. So, if selling more stock or relying on cash flow isn't going to work, what's the solution? This brings us to a really fascinating and pretty unconventional idea: the Great Share Swap. It's a piece of financial engineering that just might be able to solve this $1 trillion problem. Now, before we get into the details, what exactly is a share swap? Honestly, it's pretty much what it sounds like. Instead of a company paying cash to buy another one, it just uses its own stock as currency. It swaps its shares for the shares of the company it's buying. It's really just a way to merge or acquire assets without spending any actual cash. So how would this work in what you might call the Musconomy? Let's break it down. First, Tesla would create a whole bunch of new shares. Second, it would use those new shares to buy a controlling stake in Musk's other big companies. We're talking SpaceX, xAI, the Boring Company, all of them. Finally, that move would consolidate control, with Elon Musk and Tesla together holding the majority of this new combined supergroup. And the results are pretty significant for everybody involved. For Elon Musk, his ownership in Tesla would jump up to that 25% level he's been saying he wants. For Tesla investors, well, all of a sudden you'd passively own a piece of all of Musk's other high-growth companies. And from a strategy point of view, it just simplifies all the messy conflicts of interest that exist between these separate companies right now. But this isn't just about cleaning up the corporate org chart. Now, the real goal here is to unlock something much, much bigger: a financial super entity, a unified structure that's designed for one specific purpose: to fund all those massive ambitions we were just talking about.
Think about it this way. Before the swap, you've got this collection of separate companies, and each one has to go out and raise money on its own. But after the swap, you'd have a single, unified entity. Its combined asset base would be absolutely colossal, making it dramatically easier and cheaper to raise the enormous amounts of capital they need. And this is the key strategic insight. You have to stop thinking about financing Tesla or SpaceX or xAI as individual problems. Instead, you have to step back and look at the financing of the entire group as a whole. You use the combined strength of all the companies to lift each other up and fund the collective vision. So why does any of this matter to you? Well, because this new structure would create a much stronger borrower, one that's capable of raising huge amounts of debt. It would unlock the funding for these massive AI projects that are currently just dreams. It provides a solid capital base for the next 5 to 10 years of insane growth, and it makes the entire empire a whole lot easier to manage.
What we're really talking about here is a new kind of financial engineering. This is not just about the next quarter's earnings report. This is a potential blueprint for how a visionary with multiple, super capital-intensive companies can actually structure them for long-term survival and success. Ultimately, the goal is about one thing: resilience. Capital markets can be fickle, they open, they close. You don't want your multi-decade vision to be at the mercy of a bad year in the stock market. The whole point is to build a fortress, a financial structure that can weather any storm and guarantee that the capital is there when it's needed most. And whatever happens, it probably won't be boring. As our source puts it, the financial engineering here is far from over. So don't expect the usual, by-the-book moves. You should probably expect some big, creative, and maybe even a little bit crazy moves. Which leaves us with this one last thought. Is this proposed share swap just some clever financial trick? Or is it something much more profound? Is this the next logical step in transforming a collection of ambitious ventures into a single, cohesive, and maybe even financially unstoppable empire? The answer to that question could shape the future of technology for decades to come.